So the news just dropped. Paul Tudor Jones buys Bitcoin. He states it reminds him of gold in the 70s. This is pretty damn big news. If you don't know who Paul Tudor Jones is, well, Google him. He's one of the biggest hedge fund managers out there, and he's been in this game for a very, very long time. Now, the reason why I wanted to make this video is not to talk about Paul Tudor Jones or even talk about Bitcoin, but talk about the importance of inflation versus deflation. I had Jeff Booth on about a couple of videos before. We have a great podcast on why deflation is the key for future value. And since the 70s, once we decoupled from the gold standard and we went to the petrodollar, we've been seeing massive inflation. Dollars are garbage at the end of the day. They're just a means of exchange quickly. When it comes to deflation, when it comes to store of value, this is why Paul Tudor Jones went in on Bitcoin. His exact words was, it reminded him of gold in the 70s. Look what's happening with central banks today. You have the Treasury, which is borrowing $3 trillion plus. You have the Fed balance sheet, which is now north of $7 trillion. This is on the balance sheet. Who knows how much is off the balance sheet with their SPV deals that they've done. This is all central banks around the world. The Fed, the Canadian Central Bank, Japanese Central Bank, etc. Now we're talking about in Canada over here going into negative interest rates. You know what negative interest rates means for you? Inflation bazooka. That's what it means. Inflation bazooka. You're going to have a small period of the honeymoon effect where capital flushes into the market. Then what happens is a slow decrease of deflation while things get cheaper. And then what happens is inflation, massive inflation. And so what most people are taught from a very early age, and hey man, I'm one of them at the fucking beginning, man. You know how foolish I was when my money went back in the day? And fuck, I made a lot of money when I was young doing, interesting things. All gone. So basically, what does this mean? What does this mean for you? This means you need to be smarter. This means it's not about how much money you make, are you protecting your downside? And the downside going in the future, the writing's on the fucking wall, is inflation everywhere. Print. What do you think's going to happen to your money? What do you think? You think UBI is going to help? Okay, you get $2,000. You get $2,000. You get $2,000. Everybody gets fucking $2,000. Cool. Every year, because of inflation, guess what? You need to increase it 5% per year. Minimum. Fucking minimum. Okay, let's fast forward 5 years. What's 5 times 5? 25%. Okay, now you gotta add 25% on top of that 2,000. Let's keep on going. Another 25. And you see, it's never ending because you are decreasing the buying potential of that dollar. This is why it's fiat money. It's petro money. It's not the gold standard money anymore. It's garbage. And so when you have the top minds like Paul Tudor Jones coming in and saying this reminds him of gold in the 70s, this should give you more insight. Like, this is mainstream hedge funds. We're not talking about obscured funds. We're talking about mainstream hedge funds. And so let's say you are in a position right now, you're a contractor, you're a small business owner, you're getting your salary. Figure out ways you can allocate a little bit of your capital into deflationary scarce objects, precious metals, Bitcoin, depending on where you live, even certain land. I'm big on farmland, but you need to protect your downside. At the end of the day, if we do head into negative interest rates, you know that you're going to get charged to keep your money in the bank. Think about that. It's the most craziest thing ever. There's no savings. The money in the bank, they charge you to keep your own money in the bank. It's fucked. It's monopoly money. It's a joke. I remember when people talk about 6 figures, make $100K a year. What the fuck I'm in Toronto, so obviously geography matters. 6 figures downtown Toronto? What the fuck? You can't get shit. You can't live for shit for 6 figures downtown Toronto. Rent alone is $3K. Car, this, that. You need base minimum for like the most basic living is $80K. Like base. 6 figures. The 6-figure days are back in the fucking 70s before we decoupled from gold. The Bretton Woods Agreement. 6 figures now in major cities like New York, Toronto, Vancouver, nothing. It's an equivalent of like $40K. And so in the future, what do you need? Fucking $300,000? And we actually have examples of exactly of that. It's fucking San Francisco. Developers are earning like $300,000. And from the outside, you're like, oh shit, $300,000. What the fuck does that get you? Nothing. A bachelor pad piece of shit property in San Francisco to rent is 5 G's. So it's not about how much money you make. It's a buying power that matters the most. Gold, it holds its buying power. Right? Precious metals, for the most part, holds its buying. Even silver that fluctuates is so fucked is still better than fucking the dollar. Even gold, even Bitcoin, that a lot of people on the outside has been going at it and hating it. It holds its, think about it. It's only fucking 11 years old. 11 years old. Look where you are in 11 years. I remember when I entered this space, it was only Bitcoin, nothing else. And I went to meetups here. It was I don't know, 7 of us. And I look at now, I'm like, the space where we are in just a couple of years is obscene. It's just crazy. It's mind-boggling for me. But you guys got to protect your downside. So figure out where you are. Figure out, okay, it doesn't have to be a lot, just a little bit. Just a little bit. It can be maybe you buy a little bit Bitcoin every month, $100. Maybe you buy a little bit, gold coins, just a little bit. A little bit goes a long way. It's the compound effect, just compounding bit by bit, month by month, and not keeping your money in the bank at all. Guys, we're going to be in for a fucking bumpy ride. We have 2 markets right now. We got the stock market, which the Fed is trying to pump as much money into the fucking down in S&P. And you see it right now. It's doing a little bounce back, but it's most likely going to be a W. And then we have the real economy. The numbers came out today. North of 28 million people job loss. But the stocks are jumping up. Airbnb just announced 1,700 people layoff. Uber making a huge announcement. They don't know the numbers exactly, but they're coming out next week. Massive fucking layoffs. So we have greater layoffs than the Great Depression, but the stocks are popping up. And then now you have the Fed even talking about buying equities within the market. Obviously, legally they can't. That's why they did an SPV to buy the bond market. But they can do another SPV and buy the oil markets. That's socialism right there. Pretty fucked up if you ask me. Stock markets aren't a representation of the real market. We are in for a fucking bumpy ride. So what you got to focus on is okay, inflation's going to happen, but before inflation, we get deflation. Because that's what's going to happen. No one's paying their rent. Data came out. 40% of people of small business and medium business sizes, they're not paying rent. No money. Okay. This is going to keep on rolling out. People think it's bad now. Wait 18 months. Wait till second, third, fourth order effects hidden. Oh, serious shit, man. I'm telling you right now. Okay. Not to scare you. I'm a realist. I'm not an optimist. I'm not a pessimist. I'm a realist. I look at data. I look what's happening. There's 2 things. You look at data. You look at human psychology. You put those together, you get behavioral economics. Okay. The data and the psychology is in. The zeitgeist is out there. People in a fearful mindset. Nobody has income. Nobody's earning. You think the economy is going to just turn back on once they say, hey, come back on? Fuck no. No. Not at all. It's going to be bumpy. It's going to be difficult, but don't fret. You know what I mean? For every negativity, there's a positivity, right? And the positivity is for the short and medium term, there is going to be deflation, which gives you the opportunity that if you are sitting on cash, to jump on assets, whether it's farmland, whether it's Bitcoin, whether it's gold, whether it's silver, whether it's other small businesses that you can buy. I think there's going to be massive opportunities to buy small businesses that aren't really good at online marketing, that aren't really good at scaling online, that have really poor managers. And you're going to get it on pennies on the fucking dollar. If they claim bankruptcy and they have assets, you can come in there, just literally fucking take it over for free pretty much. So I think there's still massive opportunities for people out there, but do not follow the herd mentality. Don't get sucked up into this memetics, as Rene Bajar talks about, where, oh yeah, I'm just going to sit back and collect my paycheck and everything's made. No. Start making plans today. As I mentioned before, the smartest people right now are in R&D. They're making plans. They're allocating capital. And when the opportunity comes a knocking, then they fucking attack like a sniper. And so I want to quickly wrap this up and bring it back to Paul Tudor Jones. This is a fucking big deal, like a big motherfucking deal that he announced publicly. First one is a newsletter, then hit the Bloomberg terminal where it's like, I'm buying Bitcoin. It reminds me of 1970s. That should tell you everything. Guys, it's about keeping the buying power, not losing your buying power, which is fiat currency. So I'll keep it at that. Peace out.